Starting with about $20,000 in 2021, I've now been able to turn that into a 7-figure crypto portfolio by following my game plan using strategic compounding and understanding market cycles. Once you understand how early we are to this and you learn these 4 major things that I'm going to show you in this video that took me years to figure out, okay, I'm telling you from personal experience and also by seeing it so much, it isn't that unrealistic to do things like turn $1,000 into $100,000 or potentially even more, as long as you're following a process, doing it conservatively and doing it the right way. Okay, where the opportunity lies is that 99% of people, first off, won't take action, and second off, when they do take action, it's actually going to be at the exact wrong time, and I'm going to explain exactly why and how we can avoid this. So I'm going to really dive in and use my experience to explain to you where I see crypto going in the next couple of years and why this is a massive opportunity. Okay, I'm going to show you things like what I've noticed when money cycles through the crypto market and why that's important. Okay, I'm really going to drill into the math of scaling capital from a small amount to a large amount, as well as showing you how I've constructed my portfolios and rebalanced them to have a high potential but risk adverse portfolio that gets less and less risky as you scale your capital. And at the very end, I'm going to discuss some of the new projects that I'm watching as the cycle continues that I believe could have high potential moving forward that we haven't yet talked about. All right, so let's first off understand where we are in the crypto cycle and why things have been moving the way they have. So this is our weekly chart of Bitcoin, where we see these blue lines are the Bitcoin halving cycles mapped out. Now, I've talked a lot about this in previous videos, but we can kind of look at where Bitcoin has gone over these 4-year periods. All right, and I've done a lot of videos analyzing how these cycles sort of play out, but basically every 4 years in Bitcoin, the mining rewards get cut in half, which basically supply shocks the entire system. And you'll see over the past 2 cycles, about 500 days after this halving period is where we saw the all-time highs of the market. So we've been anticipating this over the past couple years. If this is your first time watching the channel, you can go back and watch the other videos. I'll put it in a playlist at the end of this video so you can sort of reference our progression over time. But this is exactly what we expected to happen. A slight sell-off after the halving period, which typically happens on the previous cycles over here, followed by an expected push up for the next about 530 days. So following the current trajectory, this would bring us out to about October or November of 2025. So based on the cycle math, as we've been predicting for some time, there's a high chance we run up in towards this direction over the next year, which is going to provide potentially some of the most life-changing, once-in-a-lifetime opportunities to amass capital if you understand where to direct the capital and really understand the true magnitude of what we're witnessing right now. Okay, just to put this into perspective, right now Bitcoin, even being at $106,000 per coin, is still only a $2 trillion asset class. With Trump being the president and saying he wants the US to be the capital of crypto, there are now discussions of plans of having a US reserve stash, just like we have of gold, of Bitcoin, which now has some people projecting a $15 trillion price prediction for Bitcoin. So right now, if we look at the distribution of assets in the entire globe, gold has about a $16 trillion market cap, whereas Bitcoin now has a $2 trillion market cap. So if Bitcoin were to match even the current market cap at any point, this would still only occupy about 1 to 2% of the global capital and would send the individual price of Bitcoin up to about $750,000 per token. Now, to put this into comparison, the average real estate investment in order to get a 7x would take about 20 years of time, about 21 years in commercial real estate. And the same thing is true approximately for just investing in stocks, right? The average investor is going to have to wait about 20 years if you're just investing in indexes to be able to get this kind of capital return. We're talking about this happening in potentially a lot shorter of a time. Not only that, but all of the individual smaller opportunities that are going to happen with this amount of capital inflow would be absolutely insane. One of the biggest use cases, and this is something that not a lot of people are even talking about, for me, is the fact that if we look at situations like what happened post World War II in Germany, or if we look at the Soviet Union, or if we look at things like Venezuela, where hyperinflation has happened and national currencies have lost 50, 60, 70% of their value in weeks, sometimes months, before whenever this would happen on the globe, all that wealth would just disappear. People couldn't necessarily get their hands on gold to store it in something that is not inflationary. They couldn't move their money elsewhere. And a lot of countries still to this day don't allow their citizens to invest in foreign markets. So in which case, when something like this is to happen again, there is one vehicle now that is not controlled by a centralized entity, that doesn't have the counterparty risk of keeping money either on an exchange or it's somewhat intertwined with the government, in which case Bitcoin is becoming a lot more accessible and could outweigh the use case of actual physical gold, in which case we could see an even larger market capitalization on Bitcoin than even just matching gold. Okay, but more importantly, during this process, if Bitcoin is to hit, say, $15 trillion market cap, the crypto industry is expected to reach near $100 trillion, which means there's hundreds and hundreds of billions of dollars flowing into other opportunities that we can invest in. All right, and in Michael Saylor's view, in 2045, at the average asset inflation rate, the total global assets market cap would be about about $4,000 trillion, which at 7% dominance, Bitcoin could have $280 trillion worth of market capitalization. So if Bitcoin being $13 million per Bitcoin would be about 27% of the global capital at a 3% asset inflation rate, that would mean that Bitcoin would only need to have about 5 to 7% of the global capital to be worth $3 or $4 million per coin. And there's a possibility this can happen in the next 15 years based on the trajectory. Okay, this is a chart I often refer to, but if we look at Bitcoin's power law chart, we can see in a logarithmic price and time scale shows us Bitcoin has followed the same exact flat line over the course of history. And right now we're just at the midway point of the cycle. Okay, by 2045, even if Bitcoin's hitting this lower level, you can see that lower line is still sitting at $1.5 million per Bitcoin, just following its current trajectory at the low. So the low point of Bitcoin is showing $1.5 million per coin. Okay, but the problem is with all this opportunity, most people either don't know how to navigate it or are just not going to pay attention until it's too late. People are still going to only start buying when we're at 130, 160 at the cycle high. And everyone watching this video where I'm explaining to you, I've done this twice already. Okay, I know people who've done this more than twice, right? We look at the cycles completely differently. And that's what I'm going to show you in this next part of how capital flows throughout the market. It's super, super important for you guys to understand this. Okay, so I'm going to show you basically the cheat code to reading cycles that I use. I don't even look at the news anymore. I don't look at all-time highs. I don't get FOMO. I don't get all sorts of wrapped up and wound up about news headlines because I don't care, and I will show you how to not care. So understanding where Bitcoin is going is only half the battle if we want to maximize the amount we can make in each cycle and also be able to properly time when we're going to be entering and exiting to sort of get away from the mistake of getting involved at the exact wrong time, which 99% of people are going to do. So I'm going to show you how I've noticed money flows in the cycle and how to maximize the returns by taking advantage of this. So this right here is sort of the emotional progression of how most investors are going to see the market. All right, so this was sort of us last year in November when the market started to heat up towards the beginning of the cycle. Then we sort of got that first initial push up where everyone started to wake back up. There was optimism, there was belief that crypto was still going to come back. If we look at this alongside the Bitcoin chart, I think right now we're somewhere between this belief and the thrill, and we've yet to see the full euphoria of a major push up in the market. And there's a few metrics I'm going to show you in a second that we can use to time the exact top, which is going to allow us to basically have super clarity on looking at the cycle completely differently. But the problem is most people are following normal human intuition. This is what we focus on with the private members of our trading team a lot, is rewiring your mindset to think the opposite of what most people inherently are going to think. By nature, when people are paying attention to things, it means it's relevant. It means it's something that you should be getting involved with. However, with investing, this is almost the exact opposite of the time where you should be getting involved. Okay, so I don't think we yet have had the euphoria stage, which then tends to have a pullback where people are getting complacent. They're saying, okay, it's just a pullback. We're going to continue moving higher. And then as we start to break lower, anxiety, denial, panic sets in. People capitulate and basically give up hope on the process. They're angry. They don't want to look at their portfolios. A lot of times when crypto will fall apart, you don't really want to check the app. You'll just say, oh, I'm not going to look there. That's where you want to look the most. This is when you have to double down. You have to pay attention to these moments because these are the moments where you need to be getting involved in the market. You need to be investing when it seems almost ridiculous to be interested, and you're going to have to fight every natural tendency that you have as a human being in order to push yourself to get involved. I remember investing in Solana at the bottom. I remember investing in Dogecoin when it was moving completely sideways. And you're looking at a chart like this and it's moving sideways. This very easily could have just done this for the rest of time, and it doesn't seem obvious that you're going to get this major move. Same thing with Solana. Down in these ranges, this is just like any other coin that doesn't move or could just go sideways or could go bankrupt. These are the times where you need to be taking action, and it seems so obvious in hindsight, but you have to remember that in the moment it's not going to feel that way. You have to train yourself to be able to enter in these areas and not be entering where the euphoria sets in and where all the momentum is pouring into the market. So during this cycle, we can see how the money flows into crypto, and I'm going to show you this on an actual trading view chart too. So first thing that we're going to see is Bitcoin is going to pump, and we're going to see an increase in the Bitcoin dominance. So Bitcoin dominance right now is at 56%. Starting from like 2013, we were at like 95%, and it's been continually moving down along this level. But you'll notice as you have these massive bull markets, you'll notice from 2020 to 2021, the dominance dropped significantly. And this is the exact period all through 2021. Even though the dominance of Bitcoin dropped significantly, we saw a 500% increase in the price of Bitcoin, which means that even though we had that big of an increase, the amount of capital that moved into the market outside of Bitcoin was providing all of these insane opportunities on other coins. If we look at, like, for example, Cardano, we were really earlier on Cardano, I entered publicly on YouTube right as the price was reaching this level. We literally, off of that, on a large cap project, got a 10x at the all-time high. So you're able to 10x your capital in just a few months. Look at something like Axie Infinity going from like $3 to like $150, nearly a 50x in price. But as soon as we start to see a significant drop, which right now you'll notice we're just now starting to see a major drop again after an uptrend in Bitcoin dominance, this is where we tend to get these big runs up in capital, and then money will rotate into major altcoins like Solana, like Ethereum. So you can sort of watch to see when Bitcoin starts to pick up some momentum, and then as soon as that starts to shift around, once large caps start to gain momentum, it trickles down to the mid caps. Once the mid caps make their move and start to find their free range price discovery, it will go into the small and micro caps. And this is really where we're going to see tons of month-to-month growth on some of these smaller projects that we're going to be watching out for. Then we typically see our first level of correction, which sort of correlates to this move right here, followed by a sideways market. This is a key thing that I want you to pay attention to. Once we start to see our sell signals on the larger pairs, which I'm going to show you guys in the next chapter, you're going to see a continuation of altcoins. So altcoins will continue to run while the large caps are sort of stalling out, and they've sort of reached our cycle, not only timing, but other indicators that sort of tell us that things could be changing around. And this is where smart money starts to take profits, and where all of the dumb money is so hyped and they're making money hand over fist, and they keep reinvesting into more risk on things. And this is really where that wealth transfer takes place. So this is the most important part before the cycle is over and there's a massive correction in the market. Okay, so what I want you to do is look at these three charts side by side. So this is just a price chart of Bitcoin. This is the market cap of crypto excluding Bitcoin, and this is the market cap of crypto excluding Bitcoin and ETH, which are the two largest cryptocurrencies. Okay, so there's two things that you need to pay attention to and look at. Okay, notice how each time we have produced a cycle high, we've also correspondingly had an all-time high by a lot in the total market cap of crypto. Then we see a sell-off, in total market cap. We get our push in Bitcoin, we also get our push in market cap. But here's the really, really interesting part that I believe could be the catalyst to one of the biggest opportunities that we'll see in the cycle coming up. Okay, from the previous cycle high to the high now, Bitcoin is 56% higher than the previous cycle all-time high. And if we look at the total market cap of the altcoin space, which also every time puts in a massive new high, we haven't even broke over the previous cycle high. So if we were just to match that Bitcoin chart, that means that we have reason to believe that we should expect to see bare minimum probably around $1 trillion added to the market cap, not including Bitcoin, which is going to flow tens of billions of dollars to other smaller projects. When we start to see the money flow out of the large cap, the dominance of Bitcoin start to fall like it has before, and a ton of money is going to be flowing to these smaller, more risk on altcoins. Okay, so the second thing that I want you to pay attention to is see how right here the Bitcoin price starts to stall out near the high. Okay, from here to here, this was a 35-day period where there was no net positive change in Bitcoin. However, if we look at that same exact period of time on our market cap excluding Bitcoin, the market cap of the altcoin space nearly had a 100% increase. So this is what I'm talking about. When the market starts to stall near a high point, we're going to see a continuation of greed and buying into the speculative altcoin sector. And this is why we have to have a premeditated exit plan so that we can be aware of these moments to be able to start taking profit. All right, so now I'm going to share with you the math and the concept that I understood when I first started investing that allowed me to multiply my portfolio from that like 20K area to now over 7 figures, because there's a few things that really allowed me to change my perspective that sort of gave me that game plan and my convictions that ended up helping me a lot more rather than just using my emotions. So there's a few common misconceptions about investing. If you understand these concepts, it's really not that challenging to be able to scale your money like crazy. So let's say, for example, we're starting with $1,000. I started with a lot more than this, but I just want to use this for sake of example. We only need to 3x that $1,000 5 times in order to turn this into about $250,000 worth of capital. Now, I know that's a way oversimplified version of this, but when we're looking at crypto, a 3x is really, really easy to find if you just understand how the cycles work. And I wish I looked at cycles like this from the start of my investing career, because I would have been way further ahead had I have known this from the very, very start. I was doing things that were kind of along these lines, but not perfectly. Now this is what I'm doing, and this is going to drastically change the outcome long-term of my portfolio. Okay, most people underestimate what they can do in like 5 or 10 years, and they overestimate what they can do over the course of a few weeks or a few months. Okay, this process needs to be a grand scope. You need to look at it from a way bigger picture. If you try to look at it as a get-rich-quick scheme, you're basically going to end up making emotional mistakes, trying to get it all in one trade, hit a home run. And even though sometimes you have people that get lucky with this and you have to be risk on, a lot of times you're going to end up making mistakes. It's better to have a game plan, sort of reverse engineer that game plan, and then then try to do it in real time, because getting a 3x a few times in one cycle is very, very possible. This is exactly what I did when I started investing way early on. And actually, we've already done it this cycle too. If you're just joining the channel now, we're about probably halfway through with this current cycle, but a lot of the calls that we made are already up 10x, 6x. And these are on pretty large cryptocurrencies as well. If we just look at the top 20 cryptocurrencies right now, let's take Pepe, for example. You could have basically bought Pepe anywhere. This would be a 5x. This would be like a 3x. This is a 3x. And this is just on one coin. Even if we take old coins like Litecoin, for example, at the beginning of the previous cycle, all you'd have to do is buy at some point in here and be able to sell at some point up here, and you'd easily have over a 3x. Anywhere in here, if you were to buy on ETH and sell anywhere up here, that's a 5x. Anywhere down here to up here, that's like a 1.5x. If you were able to buy Solana at any point in here, at the current price, you're already up almost 3x. So maybe you're not going to do this all in one cycle, but when the markets are really pumping, as long as you have some sort of diversification and some sort of general aim, it's really not that hard to at least hit a 3x on your main holdings. Maybe we're not going to hit a 50x, 100x, even though we are setting ourselves up to be able to have those opportunities. We really don't need that many times. Okay, and this happens a lot of times in traditional investing too. People don't want to start investing because they think they don't have enough money to invest, but they don't realize that if you maintain consistency, the sooner you put it off thinking that you need a lot of money to start will actually affect you so much more than you think at the end of the compound cycle. So for example, if you were to invest in something more traditional like the stock market, even with $500, say you're 20 years old and you give this 40 years of time to grow. So when you're 60 at 10% annual return, with you only adding $250 per month, at the end of that process, you're looking at $1.4 million. Now, say for example, you started when you were 22 instead. Even though you're dealing with small numbers here and you think you need a lot of money to get started, without even knowing it, you've cost yourself $240,000 over the course of 2 years, holding off from investing with $500, just adding $250 per month to that portfolio. Okay, and the same thing is exactly true in crypto. You don't need to hit these home runs every single time. It matters way more about being consistent and diversifying so that you can ensure you have those small 2-3 wins across a bunch of different investments that have the possibility to do things like 10x, 15x. And more importantly, knowing how to view the cycle to be able to actually take profit on those and not be piling in at the top like the rest of the dumb money that doesn't understand how the cycles actually work. Okay, so this is probably one of the most important parts for you to pay attention to. This is how I read cycles now, and it's completely different from what I used to do before, where at this point, I'm really not looking at hype. I'm not looking at news events in order to decide when to invest in crypto, because I'm looking at the overall mathematical cyclical nature of the market, which just so happens to always line up with the news or whatever happens in the world and causes these big runs in crypto. Okay, it sounds like voodoo, it sounds like craziness, but I'm going to show you the math and show you how I actually look at these cycles. On my Bitcoin chart here, I have the power law corridor, which is basically going to show me the same data as this logarithmic price chart of Bitcoin, which shows us the high and low expected ranges of the Bitcoin cycle. And you can see since the beginning, price has touched but never dropped below this red low line and has really never crossed above this purple top line. Believe it or not, this chart is the exact same chart as the other chart. And I can go over here and I can click on logarithmic, and now we're looking at the price scale as a logarithmic function. And you can see this indicator is going to once again show us the lows and the highs of the cycle. So 530 days after halving, we've hit this top red band. This has diminishing returns over time, so we didn't quite hit the top red band here. And now just at where we are with Bitcoin, we just crossed past this midline here on this indicator. The next thing that I'm adding to my chart, and you guys can add this too, is the Bitcoin cycle master. And then I'm going to go into my settings here, and all I have turned on is the terminal price of Bitcoin, which is this red line here. And there's a fairly complicated mathematical formula for terminal value, but basically it refers to the estimated value of an asset at the end of its expected useful life. But in general, the terminal value or the terminal price is the estimated value of an asset once it reaches maturity after its growth phase. They use this in financial modeling, valuing stocks, businesses, but can also be used to find the cycle highs of Bitcoin. Okay, so notice how each time we have had a cycle high, it's not necessarily where it touches the terminal value because we've touched it at all of these prices, but it does tell us when we should start looking for a potential high of the cycle, or at least that we've reached a point where we could be seeing a top. Okay, notice how the price of Bitcoin here hasn't even come in contact with the terminal price, which now the terminal price is around 140,000 per Bitcoin. So at no time ever in history has the cycle high ended before the terminal price being reached, which leads us to believe that we're going to go up to 140 at the bare minimum before we could even see see sell signals. Okay, and there's one other thing that I look for after I look at these two values in the terminal value, and this is really the third thing that I'm looking at when I'm judging where we are in the cycles. This is really perfect for buying in at the exact bottoms of cycles. So if I go back over to my trading view chart, turn this back to a regular price scale. Okay, basically anytime price is reaching this lower green band here has historically been almost the exact bottom of the cycle, but I use that in conjunction with something called the MVRV. This is probably my favorite on-chain indicator. You'll see in the black here, this is a logarithmic chart of Bitcoin, and these spikes here are showing us the market value realized value ratio, which is basically showing us the profit ratio of the long-term holders of Bitcoin. Historically, the long-term holders tend to take profits at the right time, whereas the short-term holders tend to be the ones left holding the bag. So we can see at what point the long-term holders are in extreme profit, and historically, this red band has always been the start of a cycle high, but moreover, every time we touch this green band or go through it, this has been an optimal time to buy. Okay, so you can see over here, this every single cycle bottom has ended up in this green band on the MVRV. So realistically, I'm just waiting for price to get at least close to this red band, because this is a diminishing line here, but close to this red band. With my other indicators, I can do general technical analysis to get close to the technical top, and then when it comes to the bottom, I can wait for this green zone and wait for at least between this purple and green line to be able to get in and out of the market. You really don't have to time it that perfectly. You get a 8x there. Say you buy in here and you sell somewhere in here. You get a 4x there. When we were adding all over YouTube, I was making videos about Bitcoin going to 100,000 to a million per token back here. We've already gotten another 3x here, and this is just on Bitcoin itself. So I'm really only looking at this metric when it comes to cycles, and then learning how the capital flows through the market, positioning myself really early and just looking at these three metrics. You can turn off Yahoo Finance. You don't have to look at any of the headlines. You don't have to watch the news unless you're taking trades. This picture right here is what all of the smart, really hyper intelligent crypto investors, the people who understand it, who are looking at the on-chain data, they're looking at models like this. They're not looking at whatever's the hottest thing on news headline, because once you start reaching these price areas, this is where it starts to become popular in mainstream. This is where the news starts catching on, and this is the, once again, not the optimal time. This is probably the opposite time that you want to be paying attention the most. This is exactly what I did when I really started investing in crypto in 2020, when I finally understood what's likely to happen and the fact that this could be the infant stages of a massive emerging market. I started getting into my positions. I bought a single Bitcoin back here around 15,000. On ETH, I bought about 10 Ethereum here at $400. Okay, and then believe it or not, one of the large investments that I made in the previous cycle, and we called this out on YouTube, we were one of the first people to really talk about Dogecoin in this light, which sort of caused the channel to grow substantially from that. Between that and the Cardano call, okay, I made a video talking about Dogecoin going to $1 right when we were back here, and I ended up putting a significant amount of the capital into Dogecoin here. I did end up holding way too long, so I wasn't really able to sell near this high, but I still was able to make like right around a 10x, and I put something like $3,000 or $4,000 in this trade. So at the time, making $40,000 nearly off of a relatively small amount of money, I cashed that out, and now I was able to reallocate this into other investments. I was also entering into Cardano at 28 cents, and that went on a massive run as well. I will say I could be up way more had I have actually known how to time the tops of the cycles back then. Okay, I was really good at getting in early, but I ended up bag holding a lot of it, and I took a really big loss on Luna as well. Okay, so I had been trading this back and forth. I turned like 30K into like $160,000, and then up here, this is basically what my Luna position was worth, and then this happened, and then I basically wiped out $160,000 off of that capital, and had I have been able to reallocate, probably now would be, you know, $600,000-$700,000. In addition, knowing these investment cycles and planning your investments accordingly, you have basically 4 years throughout this whole entire process, so you're able to sort of position yourself at these market lows and know that if you're buying sort of around this point, you're not really going to probably sell for the next 1,000 days, which puts you well outside the long-term capital gains threshold. Now, this starts to matter as you size up your portfolio more. When it's small numbers, that's why you see everyone just buying and selling and not caring. This is something that I paid a lot more attention to, which is why I wanted to get into Solana really early, why I wanted to pick all my stuff last fall, because now I can basically sell all my long-term holdings whenever I want. And as long as it's longer than a calendar year, at least in the US, you actually pay a smaller tax bracket by a significant amount as compared to if you sell within that 1 year period, which is going to be taxed at your income rate. Okay, so depending on your income rate, that will vary, but you'll see here, you could be looking at 15% tax opposed to whatever your income tax is. Maybe it's 25, 35%. So this sort of planning and looking at the market from this perspective has multiple ways of paying off. So it really doesn't matter the amount of money that you're starting with, it matters more about the consistency. And this is the same thing that's gotten a lot of people into doing what I do most of the time when I'm not only investing, which is trading. So for example here, regardless of the direction of the market, I can actually take, say for example, a $500 risk on a trade, right? And use my other technical analysis. This is on a 1 minute time frame. So it's happening within say an hour or two. I can use analysis and set myself up so then I can have these predictive areas, do my analysis, take these trades, and I can turn a $500 risk into nearly a $3,000 profit trade. And I can do this over the course of a couple hours. And this is largely what I was doing to supplement my investing and be able to continue to add to the portfolio. I know this is what a lot of people do on the private side of our trading team, where we're developing and doing these strategies on a daily basis to be able to supplement and continue investing capital into the crypto market. There's so much opportunity to get started in this, and there's so much upside with this emerging market. The information is right here for the taking. So that sort of brings me into my next point, which is actually going into it rather than just putting money around willy-nilly, being able to set up a proper portfolio structure based on where you're starting and where your end goal money-wise is. Okay, but doing that and being able to spread my money out and get in early, at least on the cycle, I was able to take that 20K and turn that into like $600,000 at the peak of where it grew. So I'm going to show you how I set up my portfolios so that I was able to manage risk and diversify, but expose myself to a lot of the upside potential. All right, so when it comes to actually putting money into the market, this is how I went about making sure that I scale off my risk as I scale the size of my portfolio. Obviously, when you're dealing with less amounts of money, you're okay with losing that money with the potential outcome of making those way bigger returns. The bigger the potential return, oftentimes the more risk implied with the investment. And then the same is true for the opposite. The more secure or safe an investment is, usually the less upside there is, because there's already so many people in it that it requires a lot more money to be added in order for it to increase in value. Okay, more people in it means more collective decision making is needed in order to move the price up or down substantially. Okay, so that's sort of the thesis behind this. So you'll see if we're starting with something like $1,000 and we want to turn that into $100,000, if this is your maximum risk and this is your least amount of risk, as you scale into say $25,000, $65,000, I started to position my portfolio allocation with a somewhat linear reduction of risk. Okay, and the way that I did this is by making sure that my portfolio setup was properly diversified. So a good way to think about this is having a certain percentage of your portfolio for high risk, medium risk, and capital preservation. And this is something that we do in the trading world as well. We can actually break up each individual investment into something called risk factors. So instead of talking in terms of numbers, say for example, we're now basically looking at it in terms of a game where we're trying to start with 1R and turn that into 100R. We're not looking at it in terms of money. Okay, so if I go back to this trade, for example, I entered right at this point. Had we have come up and touched this red line, I would have lost $500. That's my one factor of risk. But because I was able to close this trade out for like $2,700 in profit, I was able to make like 5.22R. Okay, so for example here, Robin on our private trading team was able to get a 25 risk reward trade on gold, okay, trading one of our new proprietary systems. You can see David also taking a trade, but notice how they're looking at this in terms of R factors. So whatever dollar amount they're risking, that's their multiple. So if they're risking $100, that's $700, $500 on each individual trade. So this is obviously a newer version of what I initially designed, but I'm gonna explain to you how I positioned my capital. And I also put together this Notion sheet here with my overall strategy for the cycles. So it's sort of aggregated into one sheet for you guys, and you have all the resources here, as well as a folder here of projects that I've invested in that we like for the cycle. And then like I said, at the end, I'm going to talk about some high potential upcoming projects. But here I have this broken into 3 different portfolio styles. This is the high risk section of the portfolio. All right, so this is where our risk is going to be high because we want a high payoff, and it's a smaller amount of capital, so we're okay with losing big chunks of it for the opportunity for us to have a lot of upside. Okay, so you'll notice in our aggressive portfolio, I have 25% allocation to low risk investments. So obviously the primary low risk investment is going to be Bitcoin. Okay, Ethereum's fairly stable, and now we have XRP, BNB, Solana, all of these larger cryptocurrencies that tend to hang out in the top 5, top 10 that just generally move with the cycle. But in general, the markets will eventually change. So I look at low risk as allocation in Bitcoin. The mid and reach allocation, that's going to be your mid cap cryptos. So basically anything under the top 10 that's sitting between the 1 and say $15-20 billion market cap. So things like Aave, Chainlink, Ton, Sui, Polkadot, Pepe, Litecoin, Near Protocol, Render Token, Tau. These are things that are going to fall into that area where you can get a little bit more upside potential out of it, but there is a little bit more risk involved. And then the highly speculative trades, we're talking about sub 1 billion, sub even $500 million market cap. For example, some of the ones ones we talked about like Ionet, Aerodrome, Tau, for example, back at our entry on YouTube, these at that time fell into that bracket of highly speculative, but way higher returns. Okay, we already have a 10x on Tau. If you had 3 to 5 of those individual investments, 1 to 3 of the mid to reach, and then a safe haven in case all of those collapse, you pick all the wrong investments and you only invest 25% in Bitcoin, you still would be able to sort of have Bitcoin carry out your portfolio, and then you'd be able to take another approach at it without losing your capital. But this portfolio style is going to allow you to probably get more than a 3x over the course of the cycle if you're timing your cycles. You should be able to get, a 10x, 15x on the net capital, even with making mistakes where maybe 1 or 2 of them go to 0, but some of them go 15, 20x. Once you move into the medium risk area where you have the capital, you don't want to necessarily blow it, but you still want to be a little bit more heavy risk on. You're not looking to just preserve that capital. That's sort of what this portfolio style is. Now, I actually jumped from this portfolio style over to this style in the 2020 to 2021 bull cycle because I was really early to the cycle and I was taking profit along the way. I was a little bit more aggressive and was able to flip the capital into this structure. Now, it doesn't mean that you have to do that. If you want to hold this throughout the whole cycle and then you wait for those cyclical sell signals, close the capital out, sit in cash, wait for the market to retest the lower part and then allocate into this, you can definitely do that. But if you're able to close out those returns and reallocate into something a little bit more geared toward preservation, that's also fine. With 50% allocation in low risk, so basically Bitcoin, you can have 1 to 3 of those investments, and then 25% allocation in the mid-reach section, and then 25% in those highly speculative investments. And then the third portfolio style, which is the one that I'm currently in right now, this is where I have 70+% of capital in Bitcoin. We're dealing with a lot larger numbers. You don't necessarily want to risk all of them on something like Luna or something that can completely go to 0, because then you've worked this whole entire time, you've amassed a bunch of capital, you make one wrong decision and it ends up going against you. Because in crypto, a lot of times things that go up by a ton, just because Bitcoin will recover the next cycle doesn't mean that those coins are going to come back. If we look at, for example, something like Filecoin, during the 2021 cycle, the price went all the way up to $178, and we're still now below the listing price, even with the market currently at all-time highs. So these projects aren't always going to come back. And you have to remember, if it's not Bitcoin, it's not always going to carry on with the next cycle. Okay, so right now I have 70% of my allocation in Bitcoin. I have about 3 to 5 reach investments in that 20%, and then 10% reserved for these highly speculative investments. So just a small amount for the highly speculative ones. Okay, a lot of these are investments that I've positioned a long time ago. These are ones that I'm just doing that I think could 50x, 100x, but there's like a 75% chance that they're going to do nothing. And we can allot for 3 to 5 of those investments in a preservation portfolio where we're looking for low risk growth, 5 to 10x growth per cycle. Okay, it obviously depends on how aggressive you want to go. I personally won't be selling any of my Bitcoin moving forward into perpetuity. I'm going to be holding it until I die. All the other coins, for example, Solana, Tau, all of the other holdings that I have in my portfolio, as soon as we reach out to that like 530 days, okay, we start hitting the terminal value. We start to see Bitcoin slow down, but we're seeing the market cap of the altcoin sector continue to chug along. That's where I'm going to be starting to close out those positions to cash and just sitting on them until we see the MVRV value back down near or in this green zone, sort of in addition to wherever this green line is in the middle of the cycle, getting a retest down to this area. And unfortunately, we are a little bit into this cycle, like I was saying, but just for full transparency, like I said, most of my portfolio is in Bitcoin. So I have 70% holdings in Bitcoin. I told you guys at the beginning of the cycle at around $38, I was putting about 30% of my portfolio into Sol. So I went a little bit heavier into the Sol allocation. So I probably oversubscribed my total investing by a little bit. So maybe like 60% Bitcoin, 30% Sol. Okay, I don't really hold ADA anymore. Okay, I have like a 3 to 5% holding in Dogecoin, which I added right at this point here. I have like a 3 to 5% allocation in Ionet, about 3% holding in Tau here, another small allocation in Tia, which I'm still underwater in, which goes to show you, right, you can't time perfectly or be right about every single investment, which is why, once again, we diversify. All right, and then another small allocation into Aerodrome. So I really have most of my capital in these large, high conviction, relatively safe plays. And then I have sort of these more speculative ones that I've entered in when the market's cool, just letting the cycles completely play out. All right, so as promised, I'm going to go into a little bit of detail about some of the projects that I like and where I see them going. And then here in just a second, I'm going to share with you where I'm going to be adding any new research that I find so you can follow along and know right away, not have to wait for them to come out in YouTube videos. I made a few videos about Aerodrome. I can link them at the end of this video here, but I do have a position here at about 92 cents. I still think the price target of Aerodrome being the main liquidity provider for base protocol could probably end up up going between $4 and $6 depending on where the cycle high comes in, which could be a really good like 4 to 6x in price. Ionet we've been watching for a long time. Just made a video talking about why I'm bullish on Ionet. Okay, this is one that I mentioned to you guys on the Discord in my long-term ideas. Talked about starting to accumulate a position when the market cap reached about 200 million. Really ended up entering the position at around $150 million market cap. You can see even from there, I've basically doubled my position, but what I'm looking for is projects that, in my opinion, could be similar or take some of the market share of some of these larger companies that have sort of given the proof of concept as to how big these markets can get. So for example, Ionet does something very similar to what Render does. Render's at a $4.6 billion market cap, whereas Ionet has like a $484 million market cap. So if it were to go up and match even the current market share of what Render has without even being in peak bull market, we're already looking at another 10x in price, which from where we entered our position would be like a 20x play. So this is sort of one of those highly speculative plays that I'm watching. Okay, so I have a few more that I'm doing some research on. Okay, I haven't posted them on YouTube yet, but what I'm going to do is share with you guys where to find this research that will probably be out by the time this video drops. So if you want to read about some of the new projects that we're watching, I'm going to be adding them here in the long-term ideas and microcap section of the public bull market section of our Discord. Okay, you can find access to the Discord in the description link of this video. You can turn on notifications to the channel and be able to have first dib access for when I'm putting out research. You can see this is also where I put dip buy levels for Bitcoin. So at this point, we had a dip buy level right here, expecting that the market would sell off after halving right into this zone. All right, and that's exactly where we got our dip buy before getting a continuation in Bitcoin. Okay, I also mentioned dip buy value for Tau and also showed you my SOL analysis and just basically putting my long-term ideas and any market updates into this channel. Okay, I do have 2 new projects that I'm going to be acquiring positions into before we potentially get this next leg up in the cycle. So make sure you join into the Discord to sort of follow along with that research. Okay, make sure to check out the other videos here if you want to follow along with sort of the progression of these calls. This Notion resource is also going to be in the tools resource. Just follow me on Instagram below. DM me the word tools and I'll have that sent over to you. You'll be able to have access to this portfolio tool. You can build out your own allocations and review all of my personal strategies and steps that I'm going to be following to time the cycle. If you found this valuable, make sure you share it with a friend, like the video, subscribe if you want to know when we drop new content. But until next time, guys, I will see you all in the next video.